Hey folks, welcome to another evening with me, Kalu Aja. This is our money space, that's what we call it. And on this space, we're talking money, the economy, finance, personal finance, right? We want to make it personal to you. How do the topics of the day affect you on a personal note? If you've noticed all week or all month, we're trying to bring in experts in the stock market, in investing, just to talk around Nigeria. What are the opportunities in Nigeria? Where can we invest ₦1 million? What are the risks and all that? We'll try to do that for you guys. So you guys start off the year with information that would guide you on how you can invest, right? What are the risks and all that? So this week I brought in Mr. Tunde Amolegbe. He's not yet joined. I'm just trying to get him on the space. He's the CEO of Arthur Stevens, a stockbroking firm, and he was the past chairman of the Chartered Institute of Stockbrokers, right? So, a wonderful guy to have around with us and just talk to us around the whole issue of investing in the market. He's not yet here, so we're just going to hold forth for him till he gets in here. But as you guys know, the Nigerian market has really been on the tear in 2024. The last time I noticed, I think Nigeria was among the top 3 in terms of returns in the world, i.e. return to the stock market. The US has had a very, very slow start to the market. But the Nigerian market has seen exceptionally high growth. Currently, right now, I believe we're top, if not second in the world in terms of returns. So it's important to ask the questions that why is the Nigerian market going up, even though we see that other, shall we say, industries in Nigeria are not doing as well. We have lots of stories about the multinationals leaving Nigeria. We have companies posting huge losses, but we have their stocks doing very, very well. We have the banking stocks doing very, very well. So it's to balance those two out. And I wanted to talk to Mr. Tunde about that. Hey, what's going on? How can he perhaps guide us? So that's what we're talking about. So, but I have a few guys that are indicated they want to speak. Whilst waiting for Tunde, I can take a few guys in. Is it Fehenti AO? I'm not sure if Aki Oduwole. Aki, did I get that right? Oh, I can try. Joey, I've got Joey also the line. I don't want to start to speak, guys, until I know what Mr. Tunde is, and then we can start the room in earnest. If it's not going to join, we can basically just go all out. I have the whole script here, and then we can talk. But Joey, what's on your mind? Why are you hopping onto the space to speak? What's on your mind, Joey?
Hi, guys. Hi, everyone. What I was going to say is actually a question, really. Because for the past 2 weeks, I've been trying to invest in the Nigerian stock market from outside the country. But I'm not sure how to go about it. Do I have to have a broker or something I can go on a website and manage myself?
Many ways. Great question, Joey. Great question. That also says the team. Great question. There are many ways you can invest in Nigeria from outside Nigeria. Many ways. One way is to basically go to a stockbroking firm. Most of the stockbroking firms in Nigeria have got online portals. So Arthur Stevens, our guest today, has got an online portal. Meristem, IBTC, Optimus, they all have online portals. So it's pretty easy for you to just simply go online, get in touch with them. You can open an account online. What they'll require from you is going to be your KYC documentation. You have to do that online, maybe a picture of your driver's license, things like that, right? If you are able to do that online, you can open an account with them. That's for the stockbroking firms. Nigeria has also got, should we say, apps that are licensed by the Securities and Exchange Commission in Nigeria that allow you outside the country or wherever you have internet to basically open an account with those apps and then to buy stocks or whatever from Nigeria. So we have lots of online apps, but we also have the stockbroking firms, which might be your best bet, right? Just go online, go to your SEC site, pull up any SEC-registered company you see, open an account with them, do your KYC, and you can start to inflow funds to them. Our guest here also has an online portal, so I'm sure you can ask him and he will be able to answer that question. I'm just trying to add him, add Mr. Tunde. I just sent you an invite, sir. So if you just get your invite, you can just accept it and we'll just start the interviews on. Joey, did I answer your question? Did that answer your question?
Yes, you did. Thank you.
Exactly, yeah. So, I mean, just any of them, I think I put up, at the end, I'm sure Mr. Tunde will put up his website and you can go on and try to also log in as well. Yeah, super. I've got Stephen Ade, just taking questions before Tunde comes in, just so that way we can, in case you guys have questions, I can write them down. Stephen, you've got the floor. Go ahead. What's on your mind? Stephen Ade? Stephen Ade is shy, not willing to speak to us, so let's just hold on. Mr. Tunde, I've sent you an invite, so once you log in, I will be able to add you on. But again, I put my DMs in here. Yeah, Kalu, I just wanted to ask your opinion. How come Nigerian banks are making a lot of profit, but the companies that they lend money to are not making a lot of profit? I see that. I won't mention on the bank. This bank made a lot of profit from FX, but the company that they are selling the FX to are making losses. Please, what's your comment on that? So, I would say this, right? The problem that we had in Nigeria in 2023 had to do with FX. There was a devaluation. What does that mean? That means if you are an importer and an exporter, let's say you are Nestle. Nestle is importing things from Switzerland and is exporting things from Switzerland. So Nestle would open up what's called a line of credit or letter of credit or an import paper. And Nestle will say, we're going to import, call it whatever you want to call it, maybe maize. They want to import maize and they're going to bring that maize into Nigeria, then use that maize to do Cerelac or Milo or whatever and sell. What price are they paying for the maize? It's an open LC. So they'll probably say, we're going to import maize at maybe, that's example, 500 naira for a bag of maize, right? And then when they do that, they're going to say, when we import at 500, it will cost us under 500 to manufacture, then we sell at 1,005, so we'll make a profit of 500, right? And they are converting the maize in dollars, so they're going to pay dollar to import that maize. So when you devalue your currency, which Nigeria did in 2023, it means the cost of the maize is no longer 500. The cost of the maize becomes 1,000 or 1,005, which means that Nestle is going to make a loss because they've already booked that maize to come in at 500, but now it's going to cost them 1,500, which means they are going to book a loss. Where do they buy the dollar from? From the Nigerian banks, right? So the Nigerian banks are sending them those dollars from their own books. So Nestle is taking that cost because they did not do hedging. They did not hedge that exposure. What does hedge mean? Hedge means you basically go in and you say, if I'm going to buy dollars at 500, there's going to be a way for you that if dollar goes up or down, you can still buy that dollar at 500. You do that by buying what's called a forward. So because these companies did not hedge their foreign exchange exposure, when Nigeria devalued, they lost a lot of money because they have to pay more for their inputs, and that's what you've seen them make a lot of losses. But the Nigerian banks were a bit more, should we say, ahead of the game. They have better treasury staff who were able to foresee that there might be a devaluation, and they were able to hedge and their positions and to offer those dollars to Nigerian guys that did not have good treasury teams. So it was a game of treasury. If you don't hedge, then of course you were exposed and you lost money. So what you see in the Nigerian banks is that they have better treasury guys that manage money than the multinationals. And the multinationals have to now look back and say, should we now start to have a robust in-house treasury team that will liaise with the bank? You just can't be an accountant and talk with the bank. You're talking about international trade, naira, dollar. So you have to also bulk up your internal teams because Nigeria is now part of the global economy. And what happens to the dollar affects what happens in Lagos. So you have to be very, very careful that you have hire good people that understand global trade and allow you not to have exposure to FX. That's just my take on it, right? All right, guys. I've got Mr. Tunde Amolegbe on here with us. I'm going to have him on mute, do a quick welcome, and then we can go ahead and start, sir. Mr. Tunde, good to have you here. If you want to go on and mute, sir, you can just introduce yourself, and then we can start off, sir.
Good evening, good morning, good afternoon, everywhere you are listening to us today. Good evening, Kalu. It's my pleasure to be here. My name is Tunde Amolegbe. I'm managing director of Students Asset Management. It's a brokerage based in Lagos, and I used to be the immediate past president of the Chartered Institute of Stockbrokers in Lagos here. That is the certifying body for stockbrokers, practicing the business in the country. I think that's a good enough introduction, I believe.
I think so, yeah. I think so, sir. Yeah, we got you. I mean, we're going to get your information of via tweets and all that, but I think so. That's a very, very good way to introduce yourself, sir. So let's get into it, Tunde. So, quick question for you. Just what's your take on the Nigerian economy in 2024? I mean, you can bring in 2023, but what's your take on this economy, global risks? How do you think we are set up in 2024?
The way to start that question, obviously, would be to first of all look at the budget, because the budget presented is essentially your template or your roadmap as to what the government expects the economy to do for this year. So we have a $27 trillion budgeted for 2024 to be spent by government on all manners of things: infrastructure, recurrent expenditure, capital expenditure, and the likes. Of the 27 trillion, the expectation is that government will be able to raise about 18 trillion out of that internally, without having to borrow. But essentially, they are looking to borrow about 9 trillion of that from those sources, in order to be able to finance that. My take is that the way things are looking, what they will probably need to borrow will be slightly more than 9 trillion.
Wow!
Because if you look at the benchmarks that they have used in arriving at even the 9 trillion, they've said, the benchmarks, they have said they expect exchange rate to be 750 naira to $1. We know that we are nowhere near that. They expect that they will be able to do 1.8 million barrels of crude. They will be able to sell 1.8 million barrels of crude per day. We are something closer to 1.5 trillion, 1.5 million barrels per day. So there's a shortfall there. And other parameters. So I figure that they'll probably need to borrow much more than that at the moment. Now, the implication, of course, is the fact that on the financial side, there will be more borrowing. More borrowing means more debt. More debt means more deficit. More deficit most likely means higher interest rates. We are not even talking
higher interest rates.
Inflation on interest rate yet. And higher interest rates means higher cost of production. Higher cost of production means more inflation. All right? And, except something turns around very quickly, cost of living is probably going to become even more challenging. So that's what I would say about that for now.
I mean, I'm hearing high interest rates. I'm hearing high inflation. We already have double-digit, nearly 30% interest rates in Nigeria. This is a good way to dovetail to the stock market, sir. If we have 30% interest rates in Nigeria, so risk-free in Nigeria is 18. That's MPR, sir. Monetary policy rate is 18%. If I buy a risk-free bond in Nigeria, I'm going to make anywhere from 15% to 18%. If interest starts to go up, sir, start to approach 25, 30, risk-free, what happens to the stock market?
Hello?
Yeah, Tunde, we can hear you. So I don't know if you got my question.
Yes. So, what happens happens to the stock market? I believe that's what you are asking.
Yes,
if rate continues to rise.
If risk-free, the key point is if risk-free rates keep on going up, what then happens to the risk return that is from the stock market? Why would I put money in the stock market if I can get 25% doing nothing?
Okay, now, very good question. Number one, the way this thing works actually is the fact that, yes, your risk-free interest rate continues to rise. Typically, what should happen is that the stock market should respond by dropping, because there's obviously inverse relationship between interest rates and stock market returns. Mm. But because the stock market in Nigeria is still essentially repricing, we are still having a situation where prices of products are being adjusted to reflect inflation and exchange rates. We might not necessarily see the stock market actually coming down. Then, of course, if there's one thing that Nigeria has going for it is a relatively large consumer base, which makes demand relatively inelastic for a lot of products. All right, which means, of course, that companies have the ability to adjust prices. Consumers will not like it, but because supply is also limited, they might not have a choice than to buy at those elevated prices. All right, so it gives the companies leverage to continue to reprice their products, and those repricing typically fits into the turnover of the companies. And if it feels in the turnover, it will also feed into the bottom line. So you could see the companies showing higher turnovers and higher profits, which will mean that while you would typically expect stock prices to come down on the back of elevated interest rates, that might not necessarily be the case for Nigeria.
Are you saying this because if I hear what you're saying, I think that because we have the consumer class that will keep on consuming, that
and limited supply.
Limited supply. So in essence, a Unilever, for instance, because they are selling something that is inelastic, people must buy soap or people must buy food. Maybe let's say Bua food. You are saying that, of course, Bua will keep on increasing the local price because of inflation, and Nigerians will keep on buying, ensuring that Bua makes earnings.
Because the substitution is very limited. Supply is limited, substitution is limited. So the large consumer base is essentially tied to buying what they can find. And what they can find are these relatively expensive products. So they will continue to buy it. So until the point where we have more producers coming into the market, there's more competition coming into the market, such that producers don't find it so easy to pass on the cost of inflation to their customers, then actual economic theories will start to apply in our market. But for now, because of the expanded consumer base and limited products, actual economic theories don't necessarily apply here.
And could I take your
typically in other economies, when you elevate interest, typically the stock market tends to suffer.
And again, if I could take you up on that, NBS says consumption has collapsed in Nigeria. As this is 2020, consumption numbers were zero, not even 2020, zero as of 2020, 2023. So Nigerians are not spending. We have lots of sachet. Nigerians can't buy a bag of rice. I mean, the minimum wage is 35,000 a month. Is that a year? That's a year, 35,000, and the bag of rice is about 50,000. So to dovetail again to the question again, do we really have a consumer class? The question is this: the rise in the stock market is really driven by the consumers or by the large institutional buyers in the market? That's really where I'm going to with this question of consumption. Is it the mom and pops buying rice on the road that is making the stock market go up? Or is it the institutional investor that has £1 billion and wants to park it somewhere and is buying stock of Dangote cement? Who is making the market move in Nigeria?
Okay, I've had to answer this question with earlier today. We must understand the nature of or the structure, if you will, of the Nigerian capital market at the moment. Number one, in terms of listing, in terms of the size of the market, the total size of the Nigerian capital market at the moment, I believe is something like $50 billion at the moment. Yeah, something like 50 billion. All right. The size of the South African market is something close to $1 trillion. In order so that you can get context, it's a relatively small market. The market capitalization of the Nigerian capital market relative to GDP is something like 13%.
That's small.
For the US, it's something like 120%. For some countries in Europe, it's like 200 and something percent. So we're talking of a relatively small market. That's one indices. Secondly, participation rate. Participation. I was just looking it up. 61% of American citizens have their investments in the stock market in one form or the other. 61%.
That is true. Yeah.
In Europe, we are talking of about 30 to 40% of their citizens having their investments in the stock market in one form or the other. In Nigeria, is a fraction of 0.5%. A fraction of 0.1%, of 0.5%. So in Nigeria, we have a population of 220 million people. The total number of people with a depository account that have actually even bothered to open a depository account is about 5 million. As of last year, the total number of accounts that actually had any trade in them as of last year in CSCS was about 100,000 out of 220 something million people.
Wait, okay, I have to say that again. Okay, I say that again just so people get the concept. So you are saying that the total number of people that actually trade in Nigeria is not more than 100,000. Is that what you're saying?
Actually have any activity whatsoever on their CSCS account. We have 5 million CSCS accounts out of a population of 220 million people. And out of that, only about 100,000 actually had any activity whatsoever on their CSCS account. So you can see, regarding listing, regarding participation, it's a small market.
Someone should tweet that out. I hope someone tweets that out. That's a data point that is interesting.
So and the way I described it to someone today was that we have a market of a few for a few. All right. So while typically in other times, they say the stock market is the barometer of the economy. I.e., if you want to know how an economy of a country is doing, just see how the stock market is doing. All right. Like in the US, if you want to know how the US economy is doing, you will see it right there in the way the Dow Jones Industrial Average is moving. But unfortunately in Nigeria, because participation is small, because listing is small, our stock market does not necessarily reflect what our economy is doing, which is the reason why you see the stock market has been booming. As at January, it's the best performing in the world. But if you look at all the other economic indices, all the other macroeconomic indices, they are not doing as well. So we need to be able to recognize that, so that we will keep our focus where it needs to be. And of course, I guess that is another work that needs to be done if we need to develop as a country. Why is it that we think that a lot of American companies are quoted? Why is it that participation is very high? That is why they are developed. The companies find it very, very easy, to raise cheap capital from the stock market. So they are eager to list. All right, savers and people that have investments also find it easy to put their money in the stock market because they know that is the easiest way for them to preserve their wealth and also transfer their wealth. We in Nigeria, unfortunately, are not caught up with that yet. All right. So what needs to happen before we can get to the point where we can point to our stock market as reflecting economic reality is for us to increase the number of companies being listed. Government companies and even private companies, particularly those big private companies that are doing business with government, they need to come and lead. Because that way, our stock market will actually reflect the economy. And of course, we also need to increase the participation by our people.
I mean,
because of all this benefits I've mentioned.
Yeah, that's an interesting segue, and I think that answer really answers the question of why the market is going up and why the economy is going down. The few guys that have the billions are trading in the stock market, and that's why we see growth in the stock market. I mean, given the data, 5 million CSCS out of 200 million, and out of that 5 million, only 100,000 CSCS. And I'm pretty sure, if you take away the MTN guys that even bought the shares, they don't trade. It's just they just bought it and it's there. They don't actually trade it and all that. Okay.
Exactly.
Okay. Good point. So now that we've established that fact, let's go into the Nigerian stock market in general. So we've been asking this question: where can I invest 1 million? I want to raise that 1 million to 10 million in this session. So the first question is the Nigerian stock market, in your opinion, a good investment outlet for a Nigerian, one, and for two, a Nigerian or foreigner abroad? Should they consider the Nigerian stock market as a good investment outlet? If you can answer for a Nigerian in Nigeria and for a Nigerian or foreigner outside Nigeria investing with dollars, if you can answer those two, sir, would appreciate it.
Okay, number one, for a Nigerian that is living here, all right, meaning that
that's in Naira.
Your cost, yes, your cost or your expenses is in Naira. Clearly, investing in Nigeria in the stock market is your best bet, because at the moment that is the only market that guarantees you positive real returns. If you put money in if you put money in real estate, you cannot get positive real real returns on an annual basis. Maybe you get capital appreciation over a period, but on an annualized basis, you cannot get positive real returns. Neither can you get positive real returns. Neither can you get positive real returns on an annualized basis, putting money in the fixed income market. In fact, the real returns on that in that wise is even negative. So the only way for you to get annualized positive returns, is to put money in the stock market, and we've seen it. And it's actually been empirically proven that in an high inflation environment such as ours, the stock market will typically outperform inflation. So there's empirical evidence for that. So for someone living abroad, looking to invest in the stock market in Nigeria, you're going to have to ask yourself. I mean, it's about profiling. You're going to have to ask yourself. Ultimately, the proceeds from the investment I'm making, what is it meant for? Am I ultimately going to spend it in Nigeria, or my intention is to ultimately repatriate it back to my place of abode? If ultimately your intention is to spend the proceeds of the return in Nigeria, then of course it makes sense. It makes sense for you to consider putting money in the stock market. However, if your intention is to repatriate the capital back to your base, then you are going to have to give consideration to the exchange rate risk. So you're going to have to ask yourself, do I think that the exchange rate will ultimately come down in favor of the naira, or do I still see further devaluation or depreciation in the future? All right. So that's the parameter you need to work into your equation. And whatever decision you arrive at will determine, whether the returns you expect to get from the stock market will ultimately cover your exchange rate risk as well as your expected rate of return.
So if I understand what you're saying, if I'm investing in Naira because I have no exchange rate risk and I'm ending in Naira, the stock market empirically can beat inflation. That's if Naira to Naira. But if I'm doing dollar Naira stock market, even though I still make that return, because I'm going to go back to dollar, that's not going to be a problem for me.
You have an additional risk. You have an additional exchange rate risk which you need to consider, which someone in Nigeria does not need to factor into their own cost.
Okay, but if I'm putting the money in Nigeria, I'm going to leave the money in Nigeria, dollar stock market.
Yes. Then all you need to consider is whether you will be able to get positive real returns. And I'm saying that to all intents and purposes, the Nigerian stock market, provides you an opportunity to be able to earn that positive real returns.
Excellent. Okay, so let's go to the next question. In terms of now I'm a Nigerian and I want to invest in Nigeria. I've got 10 million. We're going to talk to as an American later. But I'm a Nigerian. I'm 30 years old. I want to invest for 25 years. So I'm long term. I'm a young guy, 30 years old. I've got 10 million, either in my RSC or whatever. I like to invest in the Nigerian capital market with reference to stocks. You can build out a portfolio for us, sir. You can include fixed income if you want to, but we only want to talk about stocks if we could. What sort of stocks should I be looking for to build this portfolio and why? Which would you recommend? Let me just put a caveat. Everything we say here, sir, is all educational. There is no offer being made to buy or sell. Everyone listening should consult his advisor before investing. Stocks are very risky and you can lose 100% of your funds. So it's a very risky investment. We're not giving investment advice. It's purely educational. So with that disclaimer made, sir, how would if I had 10 million, I'm 30 years old, what should I do in the Nigerian stock market?
Okay, it's good. Thank you very much for putting that caveat or that disclaimer, because even if you have not done it, I'll probably have to do it, because obviously you know that I'm not allowed to dispense investment recommendations on here. Having said that, and with the disclaimer you made in place, where you're going to have to start from, and I mean you have already defined the profile of the prospective investor, a 30-year-old young Nigerian looking to invest for 5 years long term. So the age indicates that the person is not necessarily risk averse. All right, which means that which of course gives the person an opportunity to be a little bit more aggressive with their portfolio. So having said that, if such a person was sitting in front of me with that sort of profile, I would say that for in Nigeria and the profile of the kind of country we are in, you have got to look at those sectors that are working. Those sectors that are working and have good prospects. And if there's any sector that can be said to be working in Nigeria, is the banking sector, i.e. financials. It's clear that it has grown from strength to strength since recapitalization, and not only is that sector very strong and solid in Nigeria, they are also growing in the sub-Sahara sub-region and even worldwide. All right, so the finance sector is a growth sector. So I'll be looking to pick stocks in that sector, and aside from the prospect of capital appreciation, it's also a sector that has been known to pay regular dividend. So I'll be looking at that sector because of its strength. All right. Number two, obviously, I will look at telecoms. All right. Telecoms, the structure of telecoms in Nigeria right now, it's essentially an oligopoly. There are basically three of them. There's MTN, there's Airtel, there's Glo. MTN and Airtel are listed at the moment. Glo is not listed. All right. And given the demography of the country, we're a country with close to 55% youth population. All right. So, and I mean, these youth will always need to make calls. They will always need that data, and our population continues to also grow. At a relatively high rate. So you are sure that is a sector that will also continue to grow. And the margin of that particular industry, the margin is actually quite good. So I will look at telecoms. Obviously, I will also look at industrial sector stocks, because again, there is a reason why Nigeria is called a developing country. It's simply because we've not gotten to the point where we can proudly say we have enough infrastructure that enables the country to grow. And if you look at all the political campaign and whatever that has been going on in the last few years, you will see every government insisting and talking about the need to invest in infrastructure. Even the budget that was read recently, spoke about putting 20-25% of the entire budget on infrastructure. So for the foreseeable future, we are seeing a country that will continue to invest heavily in infrastructure. So industrial companies such as the Dangote cements of this world, the Boas cements, the Julius Bergers of this world, still has good prospects in an economy such as this that still has significant infrastructural deficit, if you will. All right, and I guess if I will add one more sector, it will be healthcare. All right. Again, we have significant deficit in terms of healthcare. Our population is large. All right. So that's another sector that will probably continue to grow for the foreseeable future, and a sector where the margin is also very, very healthy. Very, very healthy margin. So those are the sectors I will.
Those three.
I would those essentially four. And what I will do is to just pick maybe the best two or the best three in each sector and include it in my portfolio.
Okay, let's put you on the spot now.
Okay.
Let's put you on the spot, sir. I mean, for banking, that's why we're here. The best two. Give us. Again, two. Telecoms, we already have the two for telecoms. It's MTN and Airtel. So that's simple for us. Industrial, health, if you can give us the two, sir, just to guide us.
In health, I would say Fitson. Fitson is a fast-growing company in that sector. All right, though the market seems to have caught up with that, and but it's still, the prospect is still very significant. So I would say Fitson. I like Fitson as a person. All right, I like M&B, May and Baker. So I like those two. Not to say that there are no other stocks in that sector that is also good. But I personally like those two.
Interesting. And what about for banking, sir?
Well, banking, you could choose any one of the top 5 banks in the country. So you are talking of Zenith Bank, you are talking of GTB, you are talking of Access Bank, you are talking of UBA.
The Fugans.
You could choose any two of the 5, and you'll be good.
Okay, all right. So we're okay with that. Do you have in terms of an allocation for this 30 years? I mean, we've got 4 sectors here. How should I allocate? I mean, should I, again, a question for you. Okay, let's leave that for now. So just these 4 stocks. How should I do my allocation? If you could also guide on that.
Well, I mean, I would say just diversify. I mean, the only way you can ensure that you actually mitigate your risk is to just ensure you diversify. So, for me, I will just take the issue route out and allocate whatever I have across the 4 sectors in the same amount.
Gotcha.
Just to ensure that I'm well diversified. If anything goes wrong in any of the sectors, I'm covered on the back end.
All right. So I mean, we've come a long way, sir. We've really talked to you, given us a lot of insight. I've taken notes. If you guys have been waiting, I want to get them to speak. So in case they may have questions for you, we'll spend only 41 minutes here. Let me open the floor. I've got TO of Nigerian Stock Exchange. Please go ahead, sir, if you've got your question.
Sir, good evening, sir.
How you doing?
Fine, sir. I love what you're doing. Thank you very much. So, Sir Amolegbe of TV, and I love what you do. I like your economic comments last week. So now my question is this: youth participation in the market is very, very low. Out of the 100,000 active accounts, as confirmed by the CSCS, states that like less than 20% of the youth are participating in the market. However, I had some engagement with a lot of youths. So what they were just majorly saying was that the 2008 and 2009 market crash made their parents to lose a lot of money. So I started my research last week as regards that, and I know the major cause of the stuff was that institutional investors were like pulling out their money, and local investors, they were like, they not saw that kind of decline before, so out of here, most of them were like removing their money. So my question is this: how can we bring about youth participation in the stock market? Thank you, sir.
Lovely question.
Very, very good question. Thank you for that. The only way you increase youth participation in the market is to meet them where they are, and they are on their phones, they are on social media, they are on their devices. So you cannot expect that the way someone of my age came into the market is the same way you will expect this generation to come in. Right? So our literacy campaigns and whatever we are doing needs to meet the youths where they are and let them understand that, okay, look, this is the stock market. This is what you can gain from it, and and more importantly, and I think that this is actually quite important. Unfortunately, what we find also, which didn't used to be the case, is that there's now a need to differentiate between investment and how do I put it now? And gambling.
Very important.
It didn't used to be the case. People know when they were gambling, and they know when they were investing. All right, but unfortunately, it appears now that a lot of gambling sites or gambling products are now being packaged as investments, such that a lot of our youths are essentially gambling, but they consider it as investment because, unfortunately, even the terminologies that the gambling sites are using are the same terminologies that the investment world used to use.
Wow.
So it's important that the investment experts need to do those comparisons and let people see, particularly the youth, see the difference between investing and gambling. All right, and after making that differentiation, what we also now need to do is to actually make it as easy to invest as it is as easy to gamble. All right, because the truth of the matter is that I can easily download one of these, any one of these gambling sites and all of that, and voila, I'm betting in less than 2 seconds. I cannot say that it is that easy to invest at the moment. So if we really want to get the attention of the youth, we need to make it as easy for them to invest as easy for them to bet. All right. So that is that regarding the issue of how to get the youth. And I think that we've taken the baby steps that are necessary with the MTN EIPO. Which was relatively successful, but we need to move on from there. We need to move on aggressively from there. I'm surprised that we have not seen any other IPO use that platform since then. Despite the fact that we have had several rights issues and public offers since then. I mean, we are not supposed to be taking one step forward and 2 steps backwards. We should move forward aggressively. So, I mean, I think that those are the things that need to happen if I go to get used to come into the stock market and start to invest. What is the second question again, if you don't mind?
I think he just asked about how to get youths in, and you spoke about Ghana, and you said we should meet them there. I think that was his main question: that how can we expand the youth participation in the stock market? I think you've answered that, sir.
So I think that's for me.
It was a great question. Yeah. Okay. So again, just follow. I've shared Arthur Anderson's handle and also all their contacts on Twitter. Arthur Stevens' handle and all their contacts, their websites, their emails, phone numbers, and Twitter handle. So if you want to contact Tunde or the office, they are just a click away, right? So let's just I use them. These are my stockbrokers, so just in case you're wondering, I use them as well. So they're pretty good. I've known Tunde for generations here. So let me get Ukoma. Was it Upoma Uche? Uche, yeah.
Hello, good evening, everyone.
How you doing?
Please go ahead.
Yes, please go ahead. Yeah.
Yes, thanks so much for the efforts and everything you do for teaching financial literacy to Nigerians on this platform, especially. Thanks so much.
Thank you, sir.
All right, sir. Concerning the way you went about how you will handle a portfolio for this theoretical 30-year-old guy who's got 10 million to handle, I see it as probably, to say this, a little bit old school. So my dad did a whole lot of investments in stocks back then, and all I saw him do was he just kept buying them because he felt these were good company names, so to say, or they had good publicity or something. So he had the Totals, he had many of those companies back then, actually, many of oil and gas, and then he got some of the Nestle's and stuff like that. All he waited for at the end of the year would be this dividends payout. I would have thought, if Carl had asked me that same question, my approach would have been something along those lines. The person is looking to invest for 5 years, so I would want to have a 5-year look back period. So we're talking 16 months. So 12 months and then times 5 years. So I'm looking at 60 months. And then within the 60-month period, I want to see the volumes transacted. I would love, every time I sell something, volume, quantity traded is the main propellant for stocks. I am not one person that would say this company has a big name and then we should be thinking of putting money into it. No, I don't think you should function that way. Instead, I would have suggested that we look for tickers where we are seeing increasing quantity participating in it.
That's what she has listed.
We went through just now did not have to do with numerics.
Okuma, that's what he did, though. Okuma, that's what he did. Let me give you an example. He said banking. He said two of Fugans. Give me the banking stock outside Fugans that would have volume.
No, Here's what I'm saying, Callum. I am not saying they don't have volume. Okay? What I am saying is increasing. Okay. So let me just use an example. I participated with a few people in Ireland back then at about 2019, on the stock thread. And at the time I recommended for them, I said Guinness. Why did I recommend Guinness? Guinness was doing for, I think, 3 months consecutively. It did average volumes far higher than what it had ever done. And at that time, Guinness was still priced somewhere around 20. And I recommended this one because I saw volume participation in this thing. Volume participation, and then you're having a close that comes out being higher than the open. This to me looks like bullish volume. I might not know what's going on.
Yes, but that's the point I'm making, sir. That
I like to see volume participation.
Okay,
let me try and answer this. It is also important that one of the criteria of investing in stock markets, and this is very fundamental, is that while you are going in, aside from defining your risk and return objective, you also have to define what you are going in as. Are you going in as an investor, or are you going in as a trader? What the gentleman have just described is what a trader will do. What Carlo asked me was why would a 30-year-old looking to invest for 5 years, what will he do? So what I've described is what an investor will do. What the gentleman is describing is what a trader will do. And a trader is the one that will not pay too much of an attention to fundamentals, will not look at ratios and will not look at numbers, and will focus on volumes and movements. So his interest is on tickers. What is the price? What are prices opening? What are they closing? What are volumes traded? So he's sitting down and he's trading either on a daily basis or on a weekly basis. That's not what an investor would typically do. An investor will typically choose stocks with good fundamentals, all right? That he knows that even if they're going up and down on a daily basis, he has already defined his horizon. His horizon isn't to trade next week. All right? He has already defined his horizon as long term. So he's an investor, not a trader. So if the question I've gotten was that if I was to trade stocks in Nigeria today, my answer will have been different. So my answer is based on what I expect an investor with a defined time horizon, what they should do in Nigeria. So my answer contains not only the fundamentals of the companies that I've considered, but even the fundamentals of the environment, that is the Nigerian macroeconomic environment in which the gentleman is investing. And what the other gentleman is talking about will not even pay attention to all of that. All right. So I hope the difference is clear.
Yes, very clear, sir. Yes, that's clear.
And Tunde, just a quick one. Thank you, Poma.
Which one of the two do you think will give better returns if the person has to participate actively trading high lows and stuff?
We'll come to trading. We'll come to trading. Tunde, let's park that question. Let's park the trading question.
Let me quickly answer that. Again, defining what you want to be is very key, because the requirement for the two is different. The requirement for a trader means that you understand the technical aspects of the market. You can read charts, all right? You are able to read, market history and all whatnot. And more importantly, you actually have time to devote to trading. All right? For an investor, your requirement is also totally different. It only means that you are able to read the fundamentals of the macroeconomic that you are dealing in and the stocks you are picking. And you don't necessarily have to devote time to what is happening to the market on a day-by-day basis. So if you have the tools to dedicate to trading, all right, you could very well make. For me, what I've found over time, and what I see from the empirical studies I've read is that investors on the long run do on aggregate do much better than traders. All right, on the long run, empirically. And honestly, it's easy. It's actually easy to figure that out. I mean, if you go to the website of Warren Buffett, that is what he will continue to repeat to you. That a stock you are not willing to hold for 10 years, don't bother holding it for one day. That is Warren Buffett's mantra. He says it all the time on his YouTube page. So at the end of the day, if you have the time, you can trade it in and out and all of that. You can make short-term money on aggregate, but on the long run, the stock market is actually for people that are willing to give its time to mature. All right, and on aggregate, the investors end up being better than the traders. Thank you very much.
Thank you, sir. I wanted to come to
yeah. Thank you, sir.
Yeah, I wanted to come to parking specific to trading specifically, so we have maybe a trading idea, but I'll just get through this one. Today, quick question on the industrials. I didn't get your two for the industrials. If you could just give me that for the two industrials you're looking at.
Industrials, Dangote Cement obviously, will be there. Then of course you are looking at Lafarge Wapco. All right. Well, now you have to alternate between Lafarge Wapco and Boa Cement actually.
Gotcha.
Between the two, so Dangote Cement is the industry leader there. So
all right.
You have to bear.
Okay, excellent, sir. Let me get Prime Croft. Prime Croft, please go ahead.
Hello, can you guys hear me?
Yes, please go ahead.
Okay, actually, this question has been a little bit boiling for since the last time you posted this space, Carlo. I'm happy you brought Tunde on the speaker board today. I've been investing in stock for a couple of months now, or just getting into education here and there. And when you mentioned the age range of, an average Nigerian probably want to invest in stocks and all, I generally tend to focus on growth stocks and income stock, checking things like price to earnings ratio, the depth of the company, and multiple metrics. So I'm looking on the fundamental sense and probably some technical sense too. I would probably like to just give more insight concerning these things. So what are the metrics actually you look at before you invest in stocks? You mentioned some sectors, couple some companies too. So on a real sense, what are the metrics you look at before you can say, okay, fine, let me invest in social stocks? Because sometimes it's quite strenuous for me to read some financial report of some banks like 2 years financial report time, or probably that specific quarter of the year. Because I did same thing for Jai's Bank last year when I bought their stocks in February, and I think around June, July, I've shared roughly 99%. And towards the end of the year, I'm not sure whether Olumide or TV of Nigeria, someone posted a statistics on some companies that appreciate roughly 500%. About 5 or 6 of them, I can't recall. So, on a general sense, what are the metrics you look at?
Well, I'm an investor. Where you should start is what is your expected return. All right, what is your expected return on the money you are looking to invest? So, for argument's sake, let's say my expected return on a year-on-year basis is 20%. All right, so I want to start with looking at which companies have any yield that is above 20%. Because their earnings yield give me the possibility that I could be getting a dividend yield that is above that 20%. All right. So if, for instance, I'm looking at 20% and the earnings yield for a Zenith Bank happens to be 40%, and I know that Zenith Bank typically will declare 50% of their earnings as dividend, then chances are that I might get a dividend yield of 20% from Zenith Bank. Now, if I can get a dividend yield of 20%, it means that any other thing that I earn in terms of capital appreciation and all whatnot is extra. So that is the place to start from. Establish the sort of returns you are expecting on the monies you are putting in first. The base return you are expecting. and now look at the fundamentals of the company and see which of those can actually give you a dividend yield that's close to that. Because dividend yield is the base result you can expect. Every other thing can come on top of it in terms of capital acquisition, bonuses, and all whatnot. All right, so that is the base you can start from. Then, if you are not looking at dividend paying stocks, you still want to look at the earnings yield. Then you want to look at the P/E ratio of the growth stocks you are choosing. Typically, stocks with relatively low P/E ratio indicates that they are probably underpriced. If you are one that don't mind going into growth stocks, so you want to pick those ones and then wait and hope for capital appreciation since they are not going to pay you dividend. All right. So those two are the primary ratios that I would typically start with. But note the fact that I said start with, because you have to now do more work. All right, in looking at other fundamentals and in order to arrive at your choice of stocks.
Okay. Mm-hmm. All right. Thank you. One more thing before I.
Real quick.
Yes.
Real quick, sir. Go ahead. Real quick.
Actually, I was testing the education for various things you mentioned concerning taking their dividends, the percentage and stuff, coupled with the fundamentals of each of the company. I don't know, is there any platform for educations or probably aside the Carlos books I'm actually not read anyway?
That would do what done.
I said, looking at the educational of the whole thing, checking all this, you mentioned sectors initially, I mentioned some companies. Okay, there are vast companies under, industry, banking, even health sectors, The companies to focus on, aside the other metrics you mentioned earlier concerning checking their dividends from each of the company and also the fundamentals from each of the companies. So I'm asking on the educational side of things, is there any channels, books and stuff that people focused on just to increase more on the educational side of things?
On the educational side, well, I will speak for our own firm. We have a webinar we hold once a month. At least we make an effort to hold it once a month. Last year, I think we hold it about 9 times out of 12. So we hold it once a month. That brings in experts within the industry, to talk to people, about financial literacy, about the stock market and all whatnot. And it's free to join. We don't charge for it. And of course, regarding stock selection, we have suggestions we make every Monday. If you are on I'm gonna put our our email address on the group. So if you would like for us to add you to our mailing list or add you to our WhatsApp group, we are glad to do that. All right, and then every Mondays, typically before 11. We will typically send out stock suggestions for the week, based primarily on fundamental analysis, and that we have worked in. We will typically send that out every Monday, and then the WhatsApp platform is such that if you have questions, you could ask. I'm there on the platform. If I can answer, I will answer. Otherwise, other people that are also there on the platform that have more information will also answer. So if you want us to add you to any of those platforms, just send an email with your email address and your WhatsApp phone, and then we'll add you. And I'm sure you'll get resources that are more than enough for you to be able to trade successfully on the market. And by the way, we've also I heard. Kano mentioning that various organizations have trading platforms that enables you to open an account and do your own trading by yourself from the comfort of wherever you are. Also,
use Rise eventually, but I don't know. I'm not that comfortable with, putting like 5M on a both.
Okay, so AutoStephen also have a platform, www.autostevenonline.com. It enables you to open an account within 5 minutes, and then and you can fund the account straight from that portal and do your own trades. And then and the beauty of that platform is the fact that it also has so much resources, and it gives you market information on an online real time. So as the information has been released on the stock exchange, it also appears on that platform immediately. And we are going into any season now. So very soon, so much information will be hitting the market. So the stocks that you don't have, if they do well, you will see it on the platform and you can trade them immediately. The ones you have that are not doing so well, the information will also appear, and if you need to trade them out, you can trade them out instantly without having to wait to talk to a broker to trade for you.
All right, yeah. Thank you.
All right, thank you so much, Tunde. Thanks for that. Let me just turn around the room today. I got Gail Sabi. I don't know the name. Gail Sabi, you got the floor. Thank you for your question, Peacroft.
Hi, Kalu. Hi, Tunde. Thank you so much for the session. So my question is, I've asked friends who know stocks and all that. They cannot help me with this question. So I'm bringing it here. So is there a platform that allows me to build my own ETF, Nigerian stocks ETF, so that I can just deposit a lump sum in periodically, and that lump sum fits into those individual stocks in my ETF? Is there an app or a platform or a tool that can help with this, please?
I know a few firms. We have not launched an ETF yet, but I know a few firms, that do have ETFs. Whether you can do it electronically, I do not know, but you probably have to reach out to them. I know Vertiva has a few ETFs that are quite active. Stanbic IBTC have a few ETFs that are mirroring the market, which you can put money in. Those two I can mention to you, but whether you're able to do it electronically or not, I don't know. But I'm sure if you reach out to them, they will be able to put you through.
Sorry to interrupt you. So what I meant is, if I want to create, what's the word now? If I want to curate my own ETF, like Nigerian stocks, right? Is there? Yes.
She can, but why would you
Yeah. I thought you wanted to buy ETFs that is already created. You want to buy.
Yeah, but why would you want to do it yourself, Tunde? Yeah. Why do you want to do it yourself?
Off the top of my head, if you are looking to create your own ETFs, you are probably going to just have to create an account and then buy units of all the quoted stocks. And then benchmark it with the all share, the movements in the all share index.
So again, just for us to follow, right? To create the ETF itself, the ETF maybe has 10 stocks, right? You can buy the same 10, but the problem is that you do your rebalancing, you do your investments every time. It's much more work than you think about. So I would just say you can create your own by just looking at what they buy and build your own if you want to do it that way. I looked at the ETF for Nigeria is going away. The one I used to buy that is based in America is going away. The MSIX Nigerian X or whatever, that one is leaving. But if you look at the Vertiva, you can compare. If you just take the top 10 cap stocks in Nigeria that are very, very liquid, you can do that. But then the rebalancing falls on you. It's a lot of work. I'm not sure you want to do that. So I'm not sure. Yeah. It's more like a portfolio,
Thank you.
Super. All right, let me also get the I've got it. Chinelum Wanze. Chinelum, please go ahead. Chinelum Wanze.
Yeah. Good evening, everybody.
Hi, good evening.
Thank you so much for the session. Mr. Tunde made mention of getting real negative returns on fixed income and the likes. Is this Are you suggesting that we focus more on the stock market? And what about those that are actually into fixed income? Is it that they don't really get, like, what's the essence of actually investing in fixed income at this point in time?
Okay, good question. Actually,
I like it.
Yes, it still comes down to comes down to your objective and your risk preference. Number one, some people do not. I mean, even the way we are describing stocks now, you must realize that they are risk assets. As Carlos has mentioned before, you can make 100% return on stocks, then you can lose everything. And we've seen people lose everything before. Even in Nigeria, yeah, the shareholders of former Afribank. I don't know if there's anybody here that knows Afribank used to exist. It used to be one of the top 10 banks in Nigeria. It has disappeared now. The shareholders lost everything. Sky Bank, that is the Polaris Bank now, the shareholders lost everything. So you will lose everything in the stock market. Just the way you can make 1,000% returns on your money. Just like the people that bought shares in Transcorp made over 1,100% last year. So it's a risk asset. Stocks are risk assets. Now, some people are risk averse. They do not want risk, either by factor of age or by factor of their psychological makeup. All right? I would, for instance, ask that a 70-year-old that is not working anymore and just needs regular income to come in order for him to be able to live and take care of himself, to overexpose themselves to the stock market. So such a person, the expectation probably should be that 60 to 70% of his investment should be in fixed income securities. That guarantees that, either on a monthly basis or on a 6-monthly basis or a 1-year basis, he's getting something. And at the end of the period, he gets his capital back, guaranteed. All right? So that is why people still put money in fixed income. So for people like that, their focus really isn't on whether they are earning negative or positive real income. It is capital preservation. Are they able to preserve their money such that they can get it when they need it? All right, and then is there income coming in for them to be able to meet their regular needs? Because if you put money in the stock market, there is no guarantee that income will come in. Even stocks that are used to pay dividends could choose not to pay dividends. All right, so that is the reason why people put money in fixed income securities. All right, their risk preference, their age, and other factors. All right, so and then of course, even for young people, that still have their whole lives ahead of them, can afford to take a risk. It does not make sense to put 100% of your money in the stock market either. All right, it is better you diversify such that if the unexpected happens on the stock market, you are not left totally broke. You still have the fixed income market to fall back on and use to sustain yourself until the stock market turns around. So that is the way it works.
Yeah, I mean, it's if you're a pensioner, Tunde, you don't want to buy stocks. I mean, and this might be a good time to ask you a question. Like, someone is asking me that, yes, you answered the question for a 30-year-old. He's asking if it was a 50-year-old, would that answer, the answer and the allocation you gave, would it change for a 50-year-old significantly? What would be the main change if it was a 50-year-old guy about, what would be the answer?
So for a 50-year-old, if I would put 70% of my portfolio in equities for a 30-year-old, then for a 50-year-old, it will become 50% of my portfolio.
Okay, so we'll reduce the stocks and do more of the fixed income.
And then do some of the other asset classes.
Just to protect that portfolio. Okay, gotcha. All right, I hear you. Super. Let me get, I think Joe is on. I said, Aminu, I've got Aminu Bakari Buba. Aminu, please go ahead, sir.
Yeah, thank you, Mr. Kalu.
How you doing?
Fine, sir. Thank you very much for your wonderful programs. Always, we have been following you, and we have been getting a lot of information that helps us in making our decisions.
Thank you, sir. Appreciate it.
Independently. Thank you very much. Mine is as regards to issue of multiple exchange in the country. You know, in the United States, for instance, you have the New York Stock Exchange, you have the Philadelphia Stock Exchange, and host of others. The Nasdaq is there. And here in Nigeria, we only have one exchange. And if I could remember, in 1997, Dr. Pius Okigbo, Dennis Ojifi, I think he made a recommendation to the government that we should have multiple exchanges so that people that are far away from Lagos in different regions, like in the far north, in the east, specifically, can easily go to all those financial centers and have access to all these financial institutions for seamless financial dealings. Though right now, technology have made it easier for us to have access to all these stockbroking firms, open an account, do our trading seamlessly through the apps and live trading on the web pages. So if we can have more exchanges that we will have access to all these things, I think it will increase also the listing of companies that are in the informal sector, all right? So that people can have access to all such capitals. For instance, in Kano now, you have companies like Dentata and Sawe. These are all big companies, AA, Rano, Mekifi, and also of others. They have billions of naira in their accounts, and this money are ready to be invested in the capital market. But due to lack of proximity of such kind of institution within their own fold, this is preventing capital from flowing into such kind of market systems. I don't know if we can shed more light on that because we have resource persons around and like minds that can also help us in putting more light on that. Thank you very much.
Tunde, that's a great question, Tunde. I mean, there's the NGX Growth Board and all that. And also, I know we have many flaws of the NGX. We have many flaws of NGX itself, but for commodities, for a second, maybe smaller cap stock, I mean, that's a good question it's asking. What are we doing in terms of just spreading this? And apart from the youths, we talk about the youths, but spread the stock market gospel to other parts of Nigeria, maybe.
Okay, well, we have other markets now. Maybe they are not just as popular as the NGX at present, because obviously the NGX has been around for close to 60 years. But since I think about 5 years ago now, we have had NASD OTC, where unquoted stocks can be traded. All right, so some of the stocks some of the companies you've mentioned, Dandafa, Sawa, and Co, are supposed to actually be quoted on those on the likes of NASD. So, for instance, I don't know how many of us knows that the company that makes peak milk, that is Friesland Campina, is actually quoted. You can buy their shares and sell it. A lot of people don't know because they are not quoted on NGX; they are quoted on NASD. All right. And many other companies, the former Mobile is there on that NGX, on that NASD. And also we have the FMDQ OTC market, where primarily, fixed income instruments are traded. So you want to buy treasury bills, you want to buy bonds, you want to buy commercial paper. That is a market where those are traded. And of course, the futures and forwards that I think I heard Carlo mention earlier. That is the market where they are traded. Then of course we have I think about 2 or 3 licensed commodities exchanges now. There's the Lagos Commodities Commission of Futures Exchange, and then there's the FX Exchange. Those are where commodities are traded. Commodities such as rice paddy and co. Sesame Street and all of Sesame seeds are quoted on those exchanges. Yeah. So we have exchanges. I agree that those guys need to do more work in reaching out to the interland to try and attract attract more listing and getting some of these relatively big companies that you and I know should be listed, getting them listed. So that way we can actually capture capture the size of our economy, appropriately, and also spread the wealth by allowing people to participate in these companies, and of course also making it easier for these companies themselves to even be able to raise capital. All right, so I agree with you. There's more work needs to be done to bring the capital market to the internet. All right, but there are more exchanges now, more than one.
Antonio, this the growth board, like that's the board for the SMEs. I think it's the growth companies, those lower ones. That used to be the second tier market. I mean, that was the genesis, like second tier market back in the Julie Pharmacy and all that, right?
Yes.
Yes.
And there are a few countries there, but.
Back then, Tunde, I used to hear. I remember Julie Pharmacy. I remember that diagnostic company. It used to be a vibrant market back then. You could buy and sell those stocks and all that. The catering company on Al Avenue. Now it's almost dead. We have lots of startups in Nigeria, a lot of IT startups, but they're not quoted. So there's this big disconnect by the startups, the guys that are making the millions, that are raising millions abroad, are not quoting locally, even on the market that the growth NGX has created. That to me is a big, that these are guys that have the structure, can raise money abroad, but are not raising money locally. Big hole there.
Yes, and I think that I will hazard the guess that problem probably arises from the fact that presently the NGX, the instruments on the NGX are denominated in naira. And these companies, if they when they want to raise money, typically seek to raise money in dollars. And when they want to exit, they will also expect to exit in dollars. I do not know whether stocks are permitted to deal in dollars or in other foreign currency yet. I've tried to make that inquiry. I've not been successful because beyond these companies you have even mentioned, don't forget that we even have Eurobonds quoted on the exchange. But I have not seen any trades happen on the Eurobond market on that exchange yet. Possibly also because of this, possibly because also they are denominated in dollars. So I think that the currency lacuna could be what is preventing these companies from coming to list and raise money from the Nigerian capital market. But I know that the new team that is coming in has committed themselves to try and bring those companies into the NGX. Let's see how they end up succeeding in doing that.
Okay, interesting. I mean, that's a good area for us. I don't know. I mean, you spent good time with us, but we're going to shut down about 30 minutes today. So let me just quickly run through the floor and I'll get you in, right? So I got Ayodeji. So Ayodeji, go ahead, please. Everyone, we'll just take the guys that have requested now, and then we'll just continue. If you just bear with us. So Ayodeji, please go ahead.
Okay. Good evening. Can you hear me?
Yes, I can hear you. Please go ahead.
All right. So thank you, Carlo, for this space every Sunday. We learn a lot of things there. Okay, I actually have two questions. One which I'll send to you privately, and you have actually asked it, so I don't need to ask the question again. The second one is on the area of the time. What time of the year that is actually advisable for one to invest? If you want to do just like what you said, you want to do like an investment, 10-year investment for someone within the
what time of the year?
Market of 40 to 50 years. So what time of the year? For example, there is bull in the market now. Is it advisable now to go into the market, which I know might not be advisable? So what time of the year do you think is appropriate for someone to actually go and do the investment?
I have the answer for you. The best time to invest in Nigeria is January, February, and March. Then April, May, and June. But don't forget July, August, and if you can, October, November, and December. The point I'm making is that there's no best time. If the best time to invest is yesterday, the best time to invest is yesterday. If you the sooner you invest and you are in the market, is better than timing, looking for the right time to invest. So it's preferable if you have your objective set up and you have agreed that listen, I want to have an exposure to the capital market or to the stock market, then invest. Don't look for a particular time. Don't say school fees, people will sell shares, I'll buy. Just go into the market. You can do your dollar cost or naira cost averaging. Stay invested. That's the way to avoid that risk of you losing out on a particular time that the market went up and you are out.
Yeah, okay, that's fine. Sorry, let me add this one before I drop. Talking about investment, I'm talking about those applications where you can buy and sell stock and sell shares. So, because someone was saying that it's not convenient, comfortable putting like 5 million on a platform which you are not sure of. Okay. So, my question now is that when we buy stock on those investment apps, we have our CS account there that the share is actually linked to our CS account. So I believe that whatever happened to that particular investment app, if you are actually have your CS account there and the share is actually linked there, so whatever happened to that investment app shouldn't affect our stock that I use that particular investment app to purchase. Is that correct?
Okay, let me take that question, Carlo, if you don't mind.
Go ahead, sir.
All right. Now, number one, it is extremely important that whatever app that you are going to use to buy stocks in Nigeria, Nigerian stocks, ensure that the firm that owns that app or owns that platform, all right, goes to their website and check that they say they have member of the Nigerian Stock Exchange or license holder of the NGX underneath their name on their website. All right? I'll repeat that. The firm, go to check the website, ensure that they have the inscription member of the Nigerian Stock Exchange or license holder of NGX under their name. That shows that the firm that are giving you that app or launching that app is regulated by the stock exchange. If you now go ahead and register on their app and start trading and anything goes wrong, just as you have said, you are correct. Even if anything were to go wrong with that app or even go wrong with that company, it will have no impact on the CS on your shares in your CSCS. You are 100% correct regarding that. 100%. Your shares is safe, irrespective of what happens to the company. All right. Number two, because that company is regulated, they can't just do anything. All right. They have to make sure that first of all, before you are even able to even open an account with them, they will ask you for all the necessary, virtually all the same KYC that the banks will ask of you. They will ask of you. For instance, if you go to our own portal, www.stevenonline.com, you're going to have to upload your passport photograph. You are going to have to upload your means of ID. You upload your BVN and the likes. All right. The same thing that will require for you to open an account in a bank is and the site is fully safe. It's encrypted end to end. All right. So the issue of not being able to put 5 million there and all of that does not exist. People, as we speak, people put as much as 50 million as they go to trade some stocks. All right. And there's nothing that is going on. 100% safe. Because it's a regulated entity. All right. It is a regulated entity by SEC and by the stock exchange. So nothing can go wrong. So doing that simple due diligence of ensuring that the proprietor or the sponsor of the app you are using is regulated by the stock exchange and SEC in Nigeria will save you a lot of headache. That's all I would say. All right?
All right, thank you. Thank you.
All right, then. Welcome.
All right, thank you, Tunde. Let's get DJ Stocks. DJ Stock Trader, go ahead.
Can you hear me?
Yes, I can. Go ahead. Please go ahead.
Yeah. My question has already been answered, but let me put it like this: and the life of a day trader in Nigeria, how does it go? There are a lot of us that I've listened to the platform, a lot of long-term investments, being talked about and all that, but I'm a day trader, so what's the life of a day trader in Nigeria? And I would also get to the last speaker, so on the back channel, so maybe I would register on the site.
Okay.
Yeah.
All right. Well, I would think that in the last few months, day traders will probably have made out like bandits. But if you excuse my language, all right, because the market has been doing what 10-20% in a day. All right, both on the downside and on the upside. And I know traders like volatility, and that's how traders and investors are different. That's why the makeup of a trader is different from the makeup of an investor. Traders typically enjoy volatility. Investors don't typically do. So, and the market has been relatively volatile in the last few months. So my expectation is that traders that have been trading and paying attention in Nigeria should have made up very, very well in the last few months. All right. Now I suspect that some of the policies we are seeing down the line, maybe in the next few months, coming out from the CBN and co, all right, could lead to some bit of correction in the market. All right, and correction might mean that some stocks might come down. That again, I suppose, will probably be music to the ears of a trader, because a trader don't only make money when stocks are going up; they also make money when it's going down. So they generally thrive in an environment of volatility and liquidity. So if you're a trader and you're liquid, you should be doing well. You should be doing well in Nigeria.
Next question, please. So I guess your platform, we could use it for day trading, right?
Absolutely.
Yes. So we could trade from any part of the country. I mean, any part of the world.
Any part of the world, as long as you are able to get up within the 9:30 and 2:30 that Nigerian market is open.
Okay. I just sent you a message, so I'll talk to you.
On Twitter or where?
I sent you a message on Twitter.
Oh, okay. All right.
Yeah, just check your inbox.
All right.
Just said hello. Yeah, thank you.
All right, folks. Let me get cheese. That's Chisum Oko. I don't know if I get that right. Chisindi Oko. Did I get that right? Okay, Toluberry, please go ahead. Toluberry, please go ahead. Toluberry. Also not speaking. Let's get AA.
Excuse me.
Yeah, go ahead, Toluberry.
Can you hear me?
Yeah, go ahead.
Yeah, I actually had something in my mouth. Hello, everyone. Yeah, I've been in the space for about 45 minutes now. And I've been, I like the fact that, people are seeking financial knowledge, and they're getting good responses to their inquiries. I'm just going to add, I requested for the mic when people are asking, investment options within a certain age range. A lot of us in this space, we're about between 27 to say 47, right? And I think for many of us, we still have a lot of our road is still long, so to speak. And like you rightly said, Kalu, the best time to have invested was yesterday. The second best time is today, right? But the biggest investment is actually yourself. So that investment can come in a number of ways, which ranges between, learning a new skill, upskilling an existing skill, and if you can analyze your present skill against threats like AI in the next 10, 20 years, or your skill being fading out in the next 10, 20 years, the investment now is to learn a new skill. Because the bedrock of investment is actually...
So I want to go straight to... If you have a stock market question, I want you to go straight to it, if you don't mind. We want to talk about stocks today,
Just to summarize, I'm just going to say any income is actually the bedrock of investment. So if you can increase your income capabilities, then you can either save or invest. So you have to, invest in yourself, first of all. Earn income from that, then go forward with investment or savings. Thank you.
I appreciate that. True comments. I appreciate that. Let's get Chisim D Oko. Second call, Chisim D Oko. Please go ahead. Chisim D Oko. Please go ahead. Let's get Stephen Ade _ Adeoluwa. All right, lots of shy guys. Let me get AA4K.
Okay,
hi there, sir. Please go ahead.
Yeah, I hope you can hear me.
Yes, I can.
Carlo, thank you very much. And also, Olatunde, thank you so much for pouring out your knowledge on every one of us. Okay, so you spoke largely on investment and also trading, right? And that brought a level of clarity. And you also mentioned that the participation in the stock market is kind of very, very small. And if the market is to grow, it means that we have to pump in number, and the people that are likely to fill in this gap will be the youths, obviously. So for this new entry, which will be the youth, how would you advise them with respect to buying of penny stocks? Is this something that you say that, you're just starting out, totally avoid buying penny stock? You've mentioned the ones that we should prioritize, but I just want to get your perception. How will this new entry of youth approach the buying and selling of penny stocks in the market? So that's my straightforward question. Thank you.
Good, sir. He's asking penny stocks. We didn't go there to Ogatunde. I think you're muted, so if you just want to check here. Mr. Tunde, I think you're muted. Just check your mic, please.
Oh, okay. Sorry. I didn't realize I was muted. Okay, now, I got the question. Typically, penny stocks have a few characteristics. Number one, they are typically young companies, all right, that are growing. Number two, they do not have very, very strong fundamentals, if you will. What I mean is that they typically do not have huge reserves. They do not have huge reserves. And they are probably not as profitable as the older ones. All right. So one can argue that penny stocks if you want to par them, they are similar to our youths, young, growing people that might not have very strong fundamentals yet, but with very, very huge growth potential. So I would say that for a young person that is able to put aside money for a relatively long investment horizon, the penny stocks are the perfect fit. They are the perfect fit because as long as you do your analysis well and you are sure that the product or services that stock is producing is not one that will go out of fashion or people will get tired of or something like that. And they are not producing services or products that will go out of circulation. All right. So if you do your basic fundamental analysis, penny stocks and young people are a perfect fit, because the truth of the matter is, if you invest in them, as you grow, chances are that those companies are also growing. All right. So so you can imagine if you are growing and the company you are investing is also growing. All right. So as you make the leap, they are also making the leap, and then you grow together. Before you know it, you are standing on very solid ground, such that by the time the company matures and become very big companies, you have already invested in a basement. All right. So the stock you bought for 50 kobo, you'll be surprised in 5-10 years time, people will be fighting to buy that same stock for 100 naira, and you will be looking at it and saying, "But I bought this stock for 50 kobo," because you went in at the basement and you are patient enough to hold it to get the complete benefit. All right. I hope that's clear.
Did you answer your question?
Oh, that's fine. I'm fine with the feedback. Thank you.
I mean, it's high risk, low volume, very, very illiquid. But if you get in and those things grow, they grow very fast. 0 to 1 is 100%. 0 to 1 is 100%. But if you go for 100, it's very difficult to go for 100 to 200. But 0 to 1 is 100%. Math is crazy. All right, Abdul Razak. We'll call Abdul Razak. We've got Lawal, and I think we'll call it today, sir. Abdul Razak, please go ahead. Abdul Razak Ogunlade. All right, so get Lawal Wahib. Lawal Wahib. Please go ahead, sir. Hello, Lawal? All right.
Okay, thank you very much. Can you guys hear me?
I can hear you. Please go ahead, sir. You're going to be our last caller, so.
Yes, can you guys hear me?
I can. Please go ahead.
Hello?
Yes.
We can hear you.
Hello?
We can hear you.
Can you guys hear me?
Yes, we can.
Hello?
Yeah, let's just.
We can hear you.
I'm going to remove him, sir. I'll just remove him, sir. Don't worry.
Hello?
So I just took him off. Mr. Tunde, I think I would have loved to keep you here. We've been here, give or take, nearly 2 hours. I've got about for the final. I'd love to keep you. I know that lots of requests to speak. But if we continue, it would just you won't live here, sir. I assure you. I think I personally just want to first of all just thank you for agreeing to come and talk to us about investing. I wanted to have a high level discussion with you, and you've achieved that. Also to drill it down, you've given us a sample portfolio. We've talked about what has also surprised me today was when you mentioned 200 million or 100,000 guys that are actually trading. That's very instructive. I think it lets us know that this market we are talking about in Nigeria is really a very, very exclusive market of very, very high players that are trading. And that's why we see the returns probably. These guys are trading maybe to move funds around. And that's why that market is positive and the entire Nigerian economy is not as positive. We've talked about this SMEs, day trading, getting the younger folks to invest, So let me just ask for your closing remarks, and then probably we'll close out the recording, let you go, and just to thank you, sir. So maybe you have your closing remarks, sir. What's your take for us in 2024? What should you look out for? What are our risks? And let's take from there, sir.
Okay, thank you very much. Again, thank you, Carl, for inviting me. I always enjoy these interactions because it provides a forum that is a little bit different from what I'm used to. It's more relaxed and enables me to express myself a little bit more. So I thank you very much for that. I would say that the fact that the market is the participation is still low, and the number of listings is still low, says that the market essentially, all right, is still at a growth stage. If you look at it, it's still at growth stage. It's nowhere near
is nowhere near being a matured market like those ones, like those in America or in Europe. All right, and typically, markets that are still in the growth stage are where people can really make a lot of money and become very, very successful. In as much as you are able to invest patient money. So you need to be ready to put in patient money, not the ones that you are, you invest today and then you see the price come down by 5% and you start panicking. So in as much as you are willing to invest patient money, the prospect of being able to be very, very successful in the Nigerian stock market is still there. And the market is changing. It's changing very fast. Technology means that access to the market is becoming a lot easier. So there's no excuse, for anybody that wants to participate from getting in. Secondly, for our relatively young and young at heart, it is important that we continue to study and we continue to learn. You need to be able to differentiate between gambling and investing. People will try and confuse you about the two terms, but they have no relationship whatsoever, and they are totally different. So you learn about it, and then you get better. Again, if you are looking for a platform to trade, just simply go to www.arthurstephenonline.com, and then you can open an account there within a few minutes. I'm sure Carlo said he has put out our information, so you can reach us in case you have any issues. We'll take care of you, and then wish you happy trading, happy investing, and a happy 2024. Regarding the economy itself of Nigeria, I think that we are still on a very, very steep learning curve. I think a lot of things will. I think inflation will probably still continue to rise, maybe until on the second half of the year. Then it will stabilize, and then things will probably start to look up. Generally, I'm an optimistic person, so I would like to keep that attribute of mine, and remain optimistic about the economy. Again, I thank you all for listening, and I thank you, Carlo, for inviting me.
Thank you for accepting. And a final question for you. The growth we see in the stock market in Nigeria, do you think it's going to last till the end of the year, or is this maybe just a boom that would peter out? In effect, will Nigeria still be the top performing stock market in the world by January 1st, 2025?
If we're not at the top, we'll most likely be at least top 10.
Gotcha.
We'll likely be at least top 10, because one of your guys spoke about they haven't put money in 2008 and they lost everything and all of that. And I've heard comparisons to that time and now. And the truth of the matter is that the stock market has even outperformed those periods now. The highest the market got to, the index got to in 2008 before the crash was about 63,000 points. We are now well over 100,000 points. And yet, as at that time, in 2008, by the time the market was reaching 60,000 points, even we, the practitioners, were already becoming jittery and afraid. Mm-hmm. Even we that were the operators. But now, even at 100,000 points, we don't even feel any fear. We are still comfortable. Why? Because the circumstances are different. In 2008, all right, we knew that 55 to 60% of the market was being controlled by foreign investors. So the moment the global financial meltdown hit, we knew the foreign investors were going to run away, and run away they did, and dumped their shares, and it caused problems for the market because there was simply no base to absorb all those shares. 50 to 60% of the market that they were controlling. There was simply no base to absorb it. What have changed in 2023, 2024 is that they took the components of foreign investors in the stock market now. is actually between 5 and 15%. All right. So we are saying 85% of the market is now controlled by the locals.
Mm-hmm.
And I know that locals, by their nature, either out of sentiments or whatever, will typically not just go and dump shares. Where are they running to? They are not going anywhere. They will rather just hold. So even if the market were to come down now, what we are going to see is a correction, not a crash. And corrections typically is what stock markets do. All right. So, and what if you see worldwide, even in America, anywhere, the reason why their stock markets are stable is because they typically have that 50% of their base of participants and investors being local. In America, I think it's about 57%. Local investor participation, and the remaining is foreign. In 2008, what we had was foreigners being 55-60% of the Nigerian market, and the locals being 30%. The reverse is now the case. So the locals are the ones holding down the market now, and that's why we are still comfortable that despite the fact that the market continues to boom, there's no panic. All right, there's no panic. All right, so I see some corrections, but it's unlikely that we're going to see a crash.
Interesting.
All right.
Interesting. All right, excellent. Thank you so much for that. So I think that's a good way to end out the session today. We've had Mr. Tunde Amolegbe, the CEO of Arthur Stevens. I've shared it, sir, on air. If you guys want to contact them after the session, you can do that. Everything is shared out there. We'll talk about the Nigerian stock market in particular, opportunities, threats, where should we invest, what are the things we should look out for. And Mr. Tunde has given us a lot of insight. He was the past president of the Chartered Institute of Stockbrokers. He's been a stockbroker for as long as I can remember, so he knows the market and knows what he's talking about. And I do hope you guys have gained as much as I have gained as well from here. We're putting 2 hours being here. I think it's been 2 hours well spent. We're here every Sunday, 8 p.m. West African time, talking money, the economy, and of course finance. Next week, we're going to try to talk about real estate, so please do join us as well when we'll talk about real estate as a subsector. The whole idea is between now and February, we want to give you guys a lot of information about investing in Nigeria, so you guys are all set up to invest and to build out our portfolio. So thank you, Mr. Tunde. Thank you for all those that have joined in here. I'm going to shut down the recording. The Twitter space will be, well, I don't know if I'm going to leave it on. Just I have some of you guys I want to ask questions. I'll leave it on, take a few questions. But the Twitter recording will shut down now, and I'm going to upload that as well on the podcast, also on YouTube. In case you want to go back and listen, it's going to be there. So thank you all. Thank you, Tunde. I appreciate it. You guys have a good week coming up, and may your investments always be profitable. Thank you, sirs.
Thank you so much. Thank you, Carlo. Thanks for hosting me, and good night, everybody.
Good night, sir.